I went from losing everything over and over again to then making over $15,000 in a single day and scaling my trading very, very fast. It took me 2.5 years to go from losing over and over again to then everything just clicked. There was times where I didn't know where to hit my head. I was a beginner. I was struggling. I felt like I was getting nowhere. I was taking 1 step forward and 3 steps backwards. Then everything just came to me. Everything just clicked. And I think it was because of showing up so long over and over again and figuring out what wasn't working and what was working and cutting out what doesn't work. But in this video, I'll be going over the exact system that I use, the exact system I've taught my students to use to have consistent profits. This can lead you to time, location, financial freedom, being able to do what you want when you want. So without further ado, let's get into it. The truth is, 97% of option day traders lose money, and this is data according to 2025. So what does it take to, and I think over the last 10 years, it's like 99%. So what does it take to be part of the 1% or the 3%? You need to be willing to pull out, to work harder, to work smarter than 97% of other people. You need to be able to actually deserve it. Why would you be part of the 3% if you're not journaling every day, scanning every day, backtesting every day? If you're not giving it your all, you won't be. If anything, you don't deserve to be a profitable trader if you're not putting in the work. So again, before I get started, you just need to understand that if you want to be part of the 3%, you need to pull out what 97% of other traders haven't been able to pull out. So I'll be going over my 7-step system, talking about my pre-market break and retest system that works in basically any market. Because there is an adapting system. When the market changes, when the market sentiments shift, you need to be able to adapt, which is one of these steps that we will go over. So let's get straight into it. And again, guys, I just want my dream car. My dream car, a Lamborghini Huracan Taycan. I would have never thought I'd be able to buy this. You know, my dream was to have this car, and I spoke it into existence. I truly, truly did. So, you know, before you click off this video, please just give it a chance, please. I mean, look what it did for me. This guy made $1,000. Look at it. He made $1,000 off of $1,000. Like, if you start with $1,000 and double your money in a day, you're gonna be pretty happy. But I mean, we've truly changed a ton of lives, and we're giving you the same exact system. So, and these are results from beginners. So guys, the 7 steps consist of, first thing, you need to choose the right option strategy, which for me, I tested so many strategies until I finally found the one that worked for me, which was pre-market break and retest. I tried supply and demand. I tried trading breakouts. I tried trading RSI. I tried trading MACD. None of that worked for me until I just found the retest. Number 2, you need to master your pre-market analysis. Number 3 is timing. Number 4 is risk. Number 5 is psychology. Number 6 is implementing everything. And number 7 is executing it, and then you're printing money. You're clicking buttons on a screen and printing money. So let's go over step number 1. Choosing the right option strategy. Guys, you don't want to get what's called analysis paralysis, which is basically where you have an information overload. You're trying to do this, that, this, that, this, that. You're trying this strategy, while you're shorting, while you're buying. No, I promise you guys, you are better off sticking to one strategy and doing that consistently and building an edge based off that strategy. So stick to a proven strategy that works, and don't go from strategy to strategy. Don't be for the streets. Don't be a strategy hopper, as we call it. And don't get trapped with psychological traps. You don't want to revenge trade. You don't want to over leverage, and you need to stay very consistent, because if you're good for 2 weeks, if you trade with proper system, proper plan, proper risk management for 2 weeks, and then one day you blow up, you just threw 2 weeks down the garbage. That's called taking 1 step forward and 2 steps backwards, which is what you want to stay away from. And number 3 is poor risk management. You can have the best strategy in the world, but you don't have risk management, you'll be an unprofitable trader. And that's the truth. And guys, this is why most other YouTube option strategies don't work. They're too complex. As a beginner, or as somebody who's not profitable yet, you shouldn't be looking at these strategies. They're way too complex. You want to simplify the market as much as you possibly can. So make your main word simple. I want to make the market as simple as possible. And then as you become profitable, then you can maybe look into other things. But again, I would focus on one thing. Number 2, not a lot of them are copyable in actual option market conditions. So yeah, sure, people can show you stuff in hindsight, but they don't work in live price action. So people who don't show you actual live results, live trading results, I'd be very careful. Number 3, they're taught by non-traders or cherry-picked, like they're showing you the one win out of 100 losses, which for me, it's about transparency. I show the wins, I show the losses. The strategy obviously doesn't work every single day, but I know in the long run, it will work more often than not with a proper risk to reward, which is why it works. And number 4, you guys focus too much on the stuff that you need to kind of throw out the window for a little bit. So again, like you guys don't understand the Greeks, you guys are getting confused by it when really it's simple. And especially when you're day trading, like it's not something you need to be completely focused on, except some of the basics of it. So again, don't overcomplicate the market. And I feel like it's what a lot of traders try and do that for their cool thumbnails and try and act like they're very smart. But again, you don't want to overcomplicate the market. So don't overcomplicate it for yourself and make it harder for yourself. I'm going to make this as simple as possible for you guys. The market's going up, you want to look to buy calls. And if the market's going down, you want to look to buy puts. But there's a strategy we use. But think about it like this. I don't like to fade the trend. So if everything's going up, I'm not going to try and guess when it's going to stop going up. No, I'd rather ride it up. And if everything's going down, I'm not going to try and guess when it's going to stop going down. No, I'm going to ride it down. So let the trend be your friend. Do not try and fight the direction of the market ever. Would you rather go to a bus stop and stand in front of the bus while it's moving at full speed and hope it stops? Or would you rather stop, go to the bus stop, let the bus pick you up, and then ride with the bus? So you jumping in front of a bus is like you trying to jump in front of the trend. Everything's ripping, you're trying to buy puts hoping it's going to go down. No. We want to trade in the path of least resistance with liquid contracts, which are going to be with the trend. But there's a system. It's not like, oh, market's going up, you buy calls and make money. No, it's not. There's a system. Before we get into like the actual strategy, there's a couple trading platforms that I recommend for beginners. Webull is really good if you're over 18. Thinkorswim is very good. Or Schwab now, I guess. E-Trade's pretty good. And yeah, those are 3 really good brokers. So guys, I want to go over something that will destroy new accounts, not because they don't work, but because they're too complex. So as a beginner, I'd be very careful with calendar spreads. I'd be very careful trading just breakouts, because what happens is there's so many false breakouts that your wins will not outweigh your losses. Be careful with iron condors without context, and be careful with delta-based strategies because they're very confusing for new beginners. And as a beginner, you are not going to execute it right, most likely. So I'd rather stick with the simple strategies like the one that I have. So guys, you want to look at underlying price action over the Greeks. So the Greeks are important, the indicators are important, all that's important, but the number one thing is price action. Price action is going to decide if your options are profitable or not while you're day trading. While swing trading, option Greeks are very important, but while day trading, I don't really look at them as much. I like to look at price action. If the price action is looking good, I'm going to buy calls. If the price action is not looking good, then I won't. But you want to show what's happening now, not the lagging indications and stuff like that. So price action is always first. You need to be able to read the price action, which we will go over. So guys, step 2, you have to master pre-market options analysis. So first things first is you need to be prepared. If you're coming into the market every single day, market opens at 9:30 and you're waking up at 9:29, then you deserve to be an unprofitable trader. You deserve it. You're not prepared at all. You haven't put in the work pre-market. You don't even know what's going on with the market. No. So what you want to look for is you want to look for the pre-market highs and the pre-market lows, and you want to see the volume pre-market. If one stock has a lot more volume pre-market than another stock, and one stock is very strong compared to another stock, then what's gonna happen? You're looking at the strongest names. You're looking at the stocks with relative strength, relative weakness. And I want to show you guys that this actually works. Look at this. I did a challenge account and I turned 1,500 into 7,100 with a 1 to 3 risk to reward. It's possible. I promise you, it is possible. And you just really need to focus on that risk to reward number. So let's go. My exact scanner for finding the best option trades on pre-market movers is very simple. Literally, you guys see these stocks right here: Netflix, Meta, SPY, QQQ, Microsoft, Tesla, Apple, Coin, IWM, Google, Amazon, ARM, Nvidia, Target, AMD, MU, Hood, SMCI. I look to see what's the strongest, what's the weakness. The strongest ones are the ones I'm keeping the closest eye on. So today would be Hood, for example, and Nvidia. The new consistency, they were the strongest ones and they ripped the hardest. Same with Nvidia. Oh, what do we have here? We mark our pre-market high, we get a little pre-market high retests and VWAP retest to high day. But that's besides the point. I look at the strongest stocks of the day, I look at the weakest stocks of the day. So say SPY and QQQ are both green on the day, then I'm looking for calls and I'm looking for the strongest stocks. If they're both red on the day, I'm looking for puts on the weakest stocks. And my system is I have 3 monitors, but most of the time I'm trading off a laptop and a phone. So you guys don't have to have a crazy setup or anything like that. Anyone who's telling you won't be profitable because you don't have like a 6 setup, they're lying to you. They're completely lying to you. A phone will do just fine. A laptop will also be just fine. But it is easier to have 3 screens, I'm not gonna lie, but it's still possible. So guys, for options trading, you want to look at 3 different things. You want to look at the volume and the price action. You want to look at VWAP, and you want to look at the pre-market highs and pre-market lows. So volume and price action is basically going to show you the conviction behind the moves. So what I mean by volume and price action is you want to look at how strong and weak the candles are. You want to look at the wicks on the candles. You want to look at the strength on the candles. You want to look at where the candles are closing. And you want to look at candles have higher volume, lower volume. And that's going to kind of help tell you the conviction behind the moves. If you have a retest, but it's on a gravestone doji candle, which I have a whole YouTube video about, you're not going to want to take the retest because the price action looks bad. So you guys should definitely watch my video about candlesticks. That will help you learn the volume and price action. VWAP, I like to have it. It's always a key reference for intraday support and resistance. VWAP is a volume weighted average price. It basically tells you everybody's average for the day. So it's a big psychological thing. Like, think about it. If someone goes from up a lot to down, then what's going to happen? You know, someone goes from up to break even, they usually buy more. It's just a psychological thing. But the way I do it is I mark my pre-market highs, my pre-market lows every single morning. And then I have VWAP on my charts. If VWAP is still under pre-market high, then I look for a pre-market high retest, which I will show you. But if VWAP is above pre-market high, then you look for a VWAP retest. But we'll go over that. I want to go over this as well. You have to create the perfect options trading environment. Quiet, distraction-free. You want to have your phone on do not disturb. Like, if people are blowing you up, you need to make it known, like, yo, don't text me the first hour and a half. Don't call me the first hour and a half. Like, I blew an account because I got bad news while I was in a trade and I went on tilt. I was in a losing trade and I was just having a bad day. Phone getting blown up and I went on tilt. So trust me, guys, put your phone on do not disturb. You want to kind of be comfortable. You know, I wouldn't use social media while you're trading as well. Again, be focused, be relaxed, be patient. It's all a psychological game. So I like to trade from 9:30 to 11 a.m. Eastern, the first hour and a half of the market. These are like the golden hours for trading. You have the highest options volume and volatility, usually the best price movement, the cleanest moves, and the best chances for big moves where you can maximize the premium gains, as that's usually when the premiums move the best compared to the end of the day, the lunchtime chop, and stuff like that. But if you're going to trade for 2 times, I'd say 9:30 to 11 a.m. and then the last hour of the market. But this is definitely the best. I only trade like this hour usually, 9:30 to 11, hour and a half. So guys, I do track multiple option setups simultaneously. All I really do is I have 2 charts on TradingView right next to each other. So say I'm watching Nvidia, then I'll watch the index with it, QQQ. Say I'm watching SPY, say I'm watching Apple, then I'll put SPY next to me. So I'll put the indexes, I'm always watching them because the stocks you're trading, the stocks that I like to trade are always moving with the indexes. So if the indexes look very good, that's gonna help push my move since I'm rolling with the indexes. So guys, if you log in, like say it's your pre-market, it's an hour before market open, this is what you need to do. You need to check the index futures, check SPY and QQQ, see if they're up or down. That's going to tell you the market direction. Then go on forexfactory.com, check if there's any big volatile events, any news you need to be aware of. Like, you don't want to be in a trade when news comes out. At 10 a.m., a lot of news usually comes out. You don't want to be in a trade at that time. So you need to be aware of any economic events happening that day or any news coming. Number 3 is you want to scan the market, scan those stocks I told you guys, look for the strongest ones and the weakest ones, and then identify if they have clean pre-market ranges, because you can find a super strong or super weak stock, but it's in the middle of pre-market high and pre-market low, which is a huge range, like $20 range or something like that. No, you want to have clean pre-market price action as well. If you see a bunch of BS pre-market, a bunch of nasty candles, wicks, huge range pre-market, it's a sign it's going to be chop. So guys, again, pre-market strength and weakness, and you want to also make sure the stocks you're trading have high volume option contracts. You never want to enter illiquid option contracts ever. So stay away from the extremely cheap ones. The way I like to do it is I'll do slightly out the money, same week contracts normally. Say I'm buying Apple and Apple's at 240. And I want to buy calls, maybe I'll do 240, 250 calls, maybe 245, that's kind of far, usually 240, 250, say puts 237.50. So guys, again, SPY, QQQ, NVIDIA, AMD, Apple, Tesla, Amazon, ARM, IWM, Google, Netflix, Meta, very good ones to watch. Options, they all have liquid contracts. I would stick to names like that. I wouldn't trade the names that are hard to get in and out of, because the worst thing you can do for yourself is put yourself in a position where you can't sell. So you might be wondering, how do you analyze the best strikes? How do I scan for the best setups? And can I do this with just one monitor? So again, the analyze the best strikes is you also, once you look at those contracts, you want to click on view chart details. So say I'm buying Apple calls and I'll go to the 240, 250 calls. Press view options contracts details, the chart, and make sure that the contracts are moving good, meaning like it's not only a 10% move when it goes to high day. You want to make sure the contracts are moving well and they're moving volatile. To scan for the best pre-market setups, guys, I'm going to say this again and again and again and again. The relative strength and the relative weakness. I literally have a whole 40-minute video on my YouTube going over relative strength and relative weakness names. Think about this video as like an overview for you, and then my other videos are like in detail on the overview, the subjects I'm going over. So I'm telling you guys what you need to focus on. And yes, you can do this with just one monitor. So guys, basically, like, I use a couple trading tools. I use TradingView, I use TradeZella, and I use an option scanner. I don't really use it that much. We have it for free in New Age, actually. If you're a New Age member, you get the scanner for free. So yeah, it's really all I use, less than $100 a month, and yeah. So guys, perfecting your entry, make sure you're using a good broker that can get in and out fast. You know, the ones I mentioned are really good. Thinkorswim, Webull, E-Trade. We went over with the platform, went over the best option contracts, went over the monitor, went over the cost, but we need to go over the first 30 minutes of the market open. For the first 30 minutes of the market open, you need to wait for the initial volatility to settle and the premiums to stabilize. You need to look for directional bias developing. You want to look for stocks with also, so say you have the stocks with strength and weakness pre-market. The first 30 minutes of the market, important 30 minutes of the day, by far. These 30 minutes are going to tell you what's going to happen for the rest of the day. So what you want to do is when you market pre-market high and pre-market low, if we just chop for the first 30 minutes back up, down, up, down, up, down, it's usually not going to be a good day. But if we're showing a lot of strength, then we are going to have a good day. But say you're watching the strongest stock of the day and you're watching SPY. Say SPY is going up, but the strongest stock of the day is chopping, then you don't want to trade that stock. You want to look for the name that's moving the best with the market, so that when the market dumps, the relative strength stock barely goes down. But if SPY is going up and you have a stock chopping, then when SPY starts to go down, the stock is going to dump because it's not going with it when it's going to go up. So it's probably going to go with it when it goes down. So you don't want to get caught in that chop. Also, when you get caught in those first 30 minutes, if you get caught in the chop, what will happen is your option contracts premium will get killed. That's why you need to wait for the pre-market high or pre-market low break, or else your option contracts will get killed. So let's go over the confirmation signals I need before trading options in a breakout. I look for a 5-minute candle close above or below the pre-market high or the low. I look for the retest, and I look for clean candles. Let's go over one of my setups. Oops. So this is like a really, really good example I'm about to go over real quick. Very clean one that I want you guys to see. This is how they should look. So what do you have? You have your pre-market high, and we have our pre-market low. MU was one of the strongest stocks of the day pre-market. It was up over 1%. So we marked our pre-market highs, we marked our pre-market lows. What happens? We get a 5-minute close above the pre-market high right here. So now what am I looking for? VWAP is under pre-market high. The yellow line is under pre-market high. So that means I'm looking for a retest of the pre-market high, this 106.9 level. What happens? We go up, we come down, we retest 106.9, we enter calls on this tap. You can also have entered on this tap as well, since this is also a pre-market high retest. But I liked it here. And then what happens? When do you sell? You sell at new high day. So as you guys can see, new high day you want to sell. And then if you don't have any other levels, so I didn't have any other levels till 110. What you want to do is you want to add this EMA to your chart called the 9 EMA or the 8 EMA. 8 or 9, same thing basically. And then you guys see how it's just riding the EMA. Let's take this off. Do you guys see how it's just riding this blue line, this purple blue line? As long as it holds above this, you can stay in. As long as it holds above this, you can stay in. The second it gets under is when I get out. So I would have gone out right here on the runners, and this trade would have been a, let's see, 1 to 6 risk to reward. So your stop loss is basically if it gets a 5-minute close under pre-market high. So you guys see how we tapped it and went right back up. If this candle were to have formed like this and closed under, if this candle would have closed under, then I would have just gotten out and took this loss. So again, we're buying so close to our stop loss that our risk to reward is really, really, really good, which is why I love it. Again, guys, for call options, you want to find stocks that are up more than the market. For put options, you want to find stocks that are down more than the market. You want to look for the relative strength and weakness because it's going to show you the path of least resistance so you can catch the fullest move. You can maximize in your gains and lower your risk. You don't want to fight the tape. You don't want to fight the momentum. You want to move with the momentum. I don't know how many times I have to say that. So guys, let's go over the system for lightning fast execution. When you're entering a retest, you never want to enter calls on a green candle. You want to try and enter calls after a red candle, which is why we trade the retest. So think about it. Stocks going up, you don't buy calls. When it goes over pre-market high, you wait for it to come down and tap the pre-market high. Now you're buying on a red candle. But let me explain why this is so important. When you enter on that retest, it gives you a better entry because the premiums dump harder and give you a better price on red candles than green candles. So buying calls on a green candle, you're chasing the premium while it's going up. You can miss your entry or get a bad entry or you get wicked out. But when you're buying a retest, you're getting a really good entry because you're buying it while the premiums are going down. And you're buying with confirmation. Since it already closed that 5-minute candle over, you have no chance of getting wicked out. You also want to look for some consolidation. If you're getting consolidation at pre-market high, really nice looking wicks, that's another really good sign. So also, it's better if you have like a bullish candle or a bearish candle retest for the entry. So if you're trading calls, if you get some sort of nice hammer candle retest, that's really good instead of like a bearish engulfing. I usually don't take those. Or for puts, you want to get like a doji candle for the retest. So that's with price action. So go watch my candlestick video. VWAP's also going to act as an additional support and resistance for your strike selection. So just keep that in mind. That's why we like to, so if you're in puts, the VWAP is going to be above. So when you get up to VWAP, be ready to take some trims. Okay guys, so now we're going to go over a strike selection secret that's going to help you guys change your options trading. If VWAP's above the pre-market high, then that's a better sign. You want to look for calls on a VWAP retest shortly out the money. If VWAP is below the pre-market high and you're trading a pre-market high retest, be a little more cautious. Looks like I spelled that wrong. And select closer to in the money calls, which I spelled that wrong as well. Sorry about that, guys. I'm not a speller, I'm a trader. And also, guys, when VWAP and pre-market levels align perfectly, that's when you want to go for the more out the money options. You can catch a bigger move. So maybe you can buy slowly small out the monies and higher out the monies, because what happens if when you can catch a move from out the money to in the money, there's something called the extrinsic value. Extrinsic value is when an out the money contract is out the money. But when out the money goes to in the money, so say you have Apple 240, 250 calls, Apple goes from 240 to 243, your calls are now in the money, the extrinsic value turns into intrinsic value, and then you get a big premium pump, which helps you get absolutely paid, but you need to be in before. And guys, again, select options with volume. You don't want to have a big spread on your contracts ever. You want to be able to get in and out fastly with no problem and with ease. Strong candle forming at the retest level, volume's looking good, price action showing buyers at the level. You enter the options as the candle confirms the direction. Let's go over one more example. Let's search for it. So obviously the market's been pretty weak lately, but I think we can do in a video. And I'm going to show you guys an example that didn't even work that well, to be honest. Let's see. I mean, the market just been dumping, so we can find an example for puts. Okay, Apple. What happens? So as you can see, pre-market low, 5-minute close under pre-market low. Here's a little getting really close to the retest there on these wicks, as well as, let me show you guys something. You guys see how this low a day here is so close to pre-market low? You always want to mark that low a day. So we kind of retested this previous low day and the pre-market low, and then we dumped. But that's not really an A+ example since it didn't really get that close to it. But what's this, guys? What happened here? Under pre-market low, VWAP's under pre-market low. It came up, tapped VWAP. This is your entry for puts, and then it dumped $3. There's two potential entries here, right off VWAP or off the pre-market low retest. And I just randomly pulled this up, guys. Like this works. And I just showed you a puts example, not a calls example. So bearish candle forming on that example. Guys, you need to use proper risk management, obviously. So just, you don't want to average down. If anything, you want to average up. Think about it. Would you rather have more size in a winning position or a losing position? That's why I don't really understand when people average down. If averaging down is not a part of your plan, then don't do it. Also, guys, you need to really max out your risk. Like, if it gets the 5-minute close under and you told yourself you're gonna exit in the 5-minute close under, get out. But when you tell yourself you're gonna exit at a certain level, you need to do it at that level. So yeah, like again, like even if, and say you don't exit under the 5-minute close, I'm gonna give you guys a tip. If it goes under that 5-minute candle, the 5-minute, so say it closes the 5-minute under and then it goes under that previous candle, get out. That's what I like to do. So many traders ask me, like, how do I determine my exact risk? Do I need special software? What tools do I use to calculate targets? All that. It's simple, guys. I have key levels. I have pre-market highs, pre-market lows. My risk is a 5-minute close under the pre-market high or a 5-minute close over the pre-market low, whether I'm trading calls or puts. I keep my risk relatively small because I stop out so close to my entry. And for my targets are just other key levels, the 9 EMA and previous high days. Yeah, see. Another thing, guys, you never want to lose more than 2% of your account ever on a trade. So like if you have a small account, the way I kind of view it is you can put 10% of your account in a trade, and you don't want to ever risk more than 2% of your account in a trade. And your profit, you have to try and make 4 to 5% at least of your account on the trade. This is for small accounts. So make sure you have a calculated risk. And if you don't want to do 5-minute closes, they're too risky for you but I'm going to be honest with you guys. With 5-minute closes, there's times where you take a very small loss. There's also times where you take a very big loss. For me, why I like it so much is because it helps you not get faked out. So, and then again, guys, if you have a smaller account, truth is you have to trade a stricter risk. You do have to trade a stricter risk because you're not in the position to take chances yet. What you need to do is you need to add up your base hit, and you're going to eventually put yourself in a position to hit a home run. Start with small, achievable daily goals using simple options contracts. Compound your gains through consistency, not increasing contract size. Consistency and base hits add up. I took $1,000, almost $25,000 in 3 months, and I didn't have any crazy wins. I just added wins every single day, and when I lost, they were small losses. That is how you become a profitable trader. It's consistency, showing up, and adding up the base hits is how you will grow your account. And when you want to scale your position size, the way you could do it is as your account grows, you slowly do it. But as your account goes down, you have to slowly do it down as well. You never want to over leverage. Focus on the process. Focus on the system, not the outcome. So what I mean by that is like, Stop looking at the profit and instead look at your performance. Look at your system. Look at your risk to reward. Look at your win rate. Look at, are you trading emotionally? This is what helped me buy my first car at 16 years old, an AMG. Focus on these things. I'm not just telling you this blindly. Yeah, I mean, guys, the 2% daily loss thing is like, so for me personally, it's a little more now, but when I was trading back then, like if I lost more than 2% of my account on a day, I stopped trading for the day. So yeah, one loss, I'm usually done for the day. I really went big on less is more, and I want to put myself out of every possible outcome where I can go on tilt and revenge trade. So for me, stopping trading when I'm down a certain amount of my account, what that helped me do was protect my capital. It prevented me from emotional red trading. It prevented me from going on tilt. It prevented me from overall making a stupid mistake to blow my account. I want to trade another day. I don't care about trying to make my money back today and I have to make my money back. No, I want to be in the game for the next 10 years. Then you need to start viewing the market as I have 10 years. It's a fresh day. Stop trying to make back your losses. Instead, focus on trading good. So guys, option trading psychology. How do I stay disciplined? What journaling software do I use? And how do I control emotions? As well as, is there a system for developing confidence? Let's go over it. First things first. A ton of trading is psychology, and you need to be able to manage your emotions, and you need to be able to literally become like a bot. You have to become a bot. You have to become an NPC. Your mind needs to be, if this happens, then I do this. If this doesn't happen, then I do this. You literally have to just have commands in your head and respect them. So process over outcome, especially when trading options. You need to be able to detach yourself from the money. View the money as numbers on a screen, and if you can't detach yourself from the money, then it's a sizing problem. You need to trade with less size. Only put into the market, into your account, what you can afford to lose and not care. Therefore, you'll be able to take your emotions out of it and trade like a robot. Being emotionally neutral is really important because as you watch the money go up and down on the screen, some people, it affects them very bad, and it makes them not follow the rules. It makes them forget everything and just look at the money and get scared and make dumb decisions. No, trade the system, follow the system, process over profits, please. And then guys, journaling trades, I use TradeZella, and this is what I'm basically looking at. I'm looking at all my wins and all my losses. I'm looking at, okay, what days do most of my wins come? What days do most of my losses come? What's the system? What's the entry on most of my wins? What's the entry on most of my losses? What's the strike I traded in most of my wins? What's the strike I traded in most of my losses? What was my plan on most of my wins? What was my plan on most of my losses? I'm looking at what worked and what didn't work. So for example, if 90% of my losses were on 0 DTE contracts, or 90% of my big losses were on 0, then what does that tell me? It tells me I'm not going to trade 0 DTEs. Or if 90% of my losses are on a Monday, what does that tell me? I'm not going to trade a Monday anymore. So journaling is literally the process of seeing what works, seeing what's not working, finding things they have in common, adapting to the market shifting, and cutting out what doesn't work and doubling down on what works. So guys, you need to follow the options implementation roadmap, okay? Which I'm about to go over if you're a complete beginner. If you're not a beginner, this probably doesn't go in for you. So this is what I would recommend. And again, this took so many of my students from struggling to consistently profitable. As you can see, this girl actually paid off her mortgage from trading. She made like 200K, I think. Yeah, it's pretty crazy. So guys, week 1 to 2, I would paper trade only. And then once you're out of that paper trading kind of clunk, you can start with real money, slowly, with single contracts after week 2 to 4. And what you need to do is you want to journal your trades every single day, every single week. You need to backtest the heck during this system. But again, week 1 starts after you have a system identified and you're ready to start paper trading and taking it serious for at least 2 weeks. After you paper trade for the 2 weeks, you can start with real money. And then month 2 is you want to slowly, if your account is growing, you can slowly start to increase your position sizing as you become more neutral to trading in the market, as you become more neutral to having your hard-earned capital to risk. So this is when you can slowly start to increase as long as you're position sizing and you're feeling good. Month 3, this is when it's either like do or die if you're a beginner. So this is when you want to see, okay, what am I at right now? What are my problems? And if you are consistently losing, then you're not going to size up. You're not. If anything, you're going to stop and you're going to size down and go back to paper trading. But if you're doing well in weeks, months 1 and 2 went well, this is when you can start to go full size and make sure that you hold yourself to a standard. Start withdrawing your profits out. Make sure your win rate is staying above 60%. Your risk reward 1 to 2. This is when a lot of things are gonna happen. And again, it took me 2.5 years, guys. So I'm putting this into 3 months, but overall, this is kind of the process, whether it's a 2-year process, do this every 5 months or whatever it is. But I'm kind of, I'm a fast guy, and if you're a beginner, let's try this system for you. But if you don't feel ready, then do not do it at all. Delay. And that's without taking any mentorship or joining a community, which I would definitely recommend. It will help speed run your process. You always want to take partial profits. You want to trim. You want to take trims at previous high days, previous low days, scale out of the contract. And again, you'll never, ever, 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 ever be mad for taking profits. So when they hit your plan, when your stock hits your levels, sell. And don't take screenshots before you sell. Again, guys, when you're entering a trade, you need to tell yourself, okay, I'm gonna enter. Like I usually watch trades for a long time before they happen. Like, okay, I'm waiting for this to retest. If this retests, this is what you need to have in your head. Okay, I don't want to hold the trade for more than 20 minutes. If it retests here, then I'm gonna sell at this point and this point, but I'm gonna stop out at this point. So first things first is identify your risk, then identify your entry, then identify the take profit levels, and respect it. Respect your plan. That is so important. That's a key with option profit taking and exits, as well as being patient. I'm one of the most patient people you'll see. I'll miss 5 trades and not care because I didn't get a good entry. I make sure I get a good entry because my entry is gonna depend on my risk and my exits. So a good entry, lower risk, better reward. So again, entry is so important, and it's gonna help you get those good entries, help you lower your risk, help you get better take profits, and help you overall secure green trades. But with getting those entries and being patient, you're going to miss trades. So be okay with that mentally, and mentally prepare yourself. Guys, again, I know I'm repeating myself a lot, but it's just so important. Stop losses rules. Get out when the 5-minute closes under the retest level. Small losses on premiums. Any green trade is a big green trade, a small green trade, or a small red trade. Never hold through invalidation of your setups. If you lose confidence and it gets invalidated, you sell. Follow your plan, please, and let the chart tell you when to exit, not your P&L. Hold your profits if it's going through the 90 MA and your plan was to hold if it holds the 90 MA. Follow your plan. So guys, these are the 7 steps I use from losing over and over again to then making over $15,000 in a single day and changing my life. If I could do this with options at 17 years old, then you could too. You need to make failure not an option. You need to start small with single contracts and build consistently. And you need to stay disciplined. Success comes from discipline. It comes from showing up every single day when you're not seeing results. And it comes from making failure not an option. You need to understand that if you want to be part of the 3% or the 1% of traders that make money, you need to work harder than 99% of other people. So think to yourself, do you deserve to be a profitable trader? And answer that question with integrity. Answer it with pride. And if you don't, then take accountability. Because the number one thing I absolutely hate is when people just sit on the sidelines and they blame other things, other people for their unsuccess. Like, you need to take accountability. It's on you. If I could do it, I'm not a freaking super genius. I'm a regular person. I'm a regular kid from Michigan and I did it. If I could do it, then you could too. And if my students can do it, they're just normal just like you as well. So I promise you, you can do it. Trading can change your life. I can't even explain it in words. Like, I would have never thought I bought my dream car at 17 years old, a $320,000 car. Like, no, but we click buttons on our phone and we make money. So thank you, God, and you can do it. I promise you. Please stick to it, and feel free to ask me any questions in the comments. DM me anything that you guys need. I love you guys. Like, subscribe. This is the beginning for my channel. Hope you guys enjoyed. It's 10:50 p.m. on a Friday, and I've shot this video 2 times because the first time I didn't like it and I wanted to redo it. So I hope you guys enjoy. I love you guys. See you on the next one.